I'm going to show you how $1 a day can turn into six figures. And before you roll your eyes, no, this isn't a skip your coffee and get rich speech. I hate that speech too. This is a system, a real one. 5 moving parts. You can set the whole thing up today in about 20 minutes and then you basically never touch it again. By the end of this video, you'll know exactly where the dollar goes, what it buys, and how to grow it without ever feeling it leave your account. Let's build the machine. Here's the lie almost everyone believes about investing. I'll start when I have real money. More income, a bonus, some breathing room. Then you'll get serious. I believed that for years, and the problem is, that day keeps moving. You get the raise, and the raise gets spent. The breathing room fills up with new bills. You're always about to start. So let me flip it. The people who end up wealthy from investing almost never started with a lot. They started with a little, and they started early enough that time did the heavy lifting for them. Investing isn't a money problem. It's a machine problem. If you don't have the machine built, no amount of money fixes it. It just passes through your hands. If you do have the machine built, even $1 a day starts stacking. So we're not going to wait for the money. We're going to build the machine first at the smallest amount that cannot possibly hurt you, $1 a day. Then we grow it. Let me show you why the dollar matters more than it looks. $1 a day is about $30 a month, $365 a year. That's it, a tank of gas, one dinner out. Now, I'm not going to promise you a number because markets go up and down and nobody can guarantee returns. But historically, a broad basket of the stock market has averaged somewhere around 7 to 10% a year over long stretches. So, let's just walk through what $30 a month could look like, using 8% as a rough, honest illustration. After 10 years, a few $1,000s. Nice, but not life-changing yet. But here's where it gets interesting. Because compound growth doesn't grow in a line. It grows in a curve. Leave that same dollar a day running for 30 years, and you're looking at roughly $45,000 from $1 a day. Run it for 40 years, and that dollar a day crosses 6 figures, around $100,000, from the coins in your couch. And most of that? It's not your money. You only put in about 15 grand of your own dollars over 40 years. The other 85,000 is growth on growth. That's the machine working while you sleep. Now hold that number in your head, because in a few minutes, I'm going to show you how to turn that dial up and what happens to this picture when you do. It gets a little crazy. Quick question. If $1 a day only ends up as 100 grand in 40 years, why not start bigger? Why $1? Because the dollar isn't the point. The habit is the point. Here's what actually kills people's investing, not the amount, the starting, the friction, the I'll set it up this weekend that never comes. $1 removes every excuse. You can't tell yourself you can't afford $1. There's no budget meeting, no sacrifice, no pain. So the dollar's real job is to get the machine built and running while the stakes are basically zero. Once it's running, once the pipe is open and the money's moving on autopilot, turning it up from $1 to 2 to 5 to 10, that's easy. The hard part was never the money. It was building the thing in the first place. Start stupidly small, get it running, then grow it. That's the whole philosophy. Okay, here's the actual machine. 5 pieces. I'll give you each one. Exactly what to do, and why. Part 1. The pipe, the account. First, you need somewhere for the money to go. 1 account, not 5. This is an investment account, a brokerage account, or a retirement account, if your country or job gives you one with a tax advantage. You want one account where you're allowed to buy investments. The mistake here is over-shopping. People spend 3 weeks comparing platforms and never open anything. Don't. Pick one reputable low-fee provider. Open the account. That's the pipe. The money has somewhere to flow now. Your job, open one investment account. Done? Move on. Part 2. The faucet, the automation. This is the most important part of the entire system, and it's the one people skip. You do not invest $1 a day by hand. You'd forget by Thursday. Nobody logs in every single day. That's a fantasy. Instead, you turn the faucet on once and let it run. Set up an automatic transfer. $1 a day is $7 a week or $30 a month. Pick whichever your account allows and schedule it. Same day every week or every month. Automatic. Now the money moves whether you're motivated or not, whether you remember or not. This is the difference between people who invest and people who mean to invest. One group made a decision once, the other keeps trying to make it every day and losing. Automate it and discipline stops being your job. The system carries it. Your job, set one recurring auto transfer into the account. Set it and forget it. Part 3. The bucket. What you buy. Money's flowing into the account now, but cash just sitting there isn't invested. You have to actually buy something with it. And this is where people freeze. Which stock? What's hot? What if I pick wrong? So let me take that whole problem off your plate. You're not picking stocks. Picking individual companies is a game most professionals lose. We're not playing it. Instead, you buy one thing, a low-cost broad market index fund. Instead of betting on one company, you own a tiny slice of hundreds or thousands of them at once. When the overall market grows over time, your slice grows with it. You buy the same thing every single time your dollar shows up. No decisions, no guessing, no checking the news. Boring on purpose. Boring is what works here. Your job? Choose one low-cost, broad market index fund and buy that and only that with every contribution. Part 4. The dial. How you grow it. Now, remember I told you $1 a day becomes about 100 grand over 40 years. Here's the part that changes everything. You don't stay at $1. But here's the problem. Just invest more is useless advice. More from where? If you had spare money lying around, you'd already be using it. So let me give you the actual mechanism, the specific rule that turns the dial for you on autopilot without you ever feeling poorer. I call it the 50% raise rule, and it works like this. Every time new money shows up in your life, you split it in half. Half goes to your life. Enjoy it. You earned it. The other half goes straight into the machine. You raise the auto transfer by that amount once and then forget it again. That's it. You never fund the dial out of sacrifice. You fund it out of new money. Money you didn't have last month, so half of it feels like a gift, and the other half quietly builds your future. You never feel $1 leave, because you're only ever giving up half of money that wasn't there before. So what counts as new money? 3 triggers. Watch for these. Trigger 1, you kill an expense. You cancel a subscription. You renegotiate your phone bill. You drop a service you forgot you had. Say you free up $30 a month. Old you would have quietly respent it within a week. New you sends half, $15 a month, to the machine. Your $1 a day just became $1.50 a day, and you feel nothing because that money was already leaving your account anyway. Trigger 2, your income goes up. A raise, a promotion, a higher hourly rate, your take-home goes up $150 a month, half, $75, goes to the machine. You still get to feel the raise. You still get the other $75 to spend, but now you're funding your future with money you literally did not have before, so it never pinches. Trigger 3, money shows up once. A bonus, a tax refund. You sold something, a side gig paid out. Same rule, half of it into the machine, once. A $400 refund. $200 goes in. Done. Now watch what this does over just a couple of years. You start at $1 a day. Month 1, you cancel some subscriptions. You're at $1.50. 6 months in, you get a small raise. Half of it in, now you're around $4 a day. Year 2, a little side income kicks in. Half of that in. And now you're at $7, $8 a day. And you never made a single painful sacrifice. You just applied one rule every time new money appeared. And here's why that matters so much. Watch what happens to that $100,000 picture when the dial climbs. $2 a day instead of 1 over the same 40 years isn't 100 grand anymore. It's over 200,000. $5 a day? Now you're looking at over $500,000. Same machine, same rule. You just kept splitting new money in half. That's the secret nobody tells you. You don't need to start big, and you don't need willpower. You need one rule. Half of every new dollar goes to the machine, running quietly in the background for years. Your job, whenever new money shows up, an expense you killed, a raise, a one-time windfall, send half of it into the machine by raising your auto transfer. then forget it again until the next one. Part 5. The lock. Leave it alone. Last part, and it's the hardest, even though it's the one where you do nothing. Once the machine is running, lock it. Don't touch it. Don't check it every day. Don't panic sell when the market drops, and it will drop. That's normal. Here's the thing about the market going down. For a long-term investor who's still buying every month, a dip isn't a disaster. You're just buying the same thing on sale. The people who get hurt are the ones who see red, get scared, and yank their money out at the bottom. They turn a temporary dip into a permanent loss. So the rule is simple. Automate it so you don't have to think, and then genuinely don't think about it. Check it a couple times a year. Let time and compounding do the work they're extremely good at, and you're extremely bad at. The machine doesn't need you hovering over it. It needs you to leave it alone. Your job? Don't touch it. Let it run. So here's exactly what to do before this time tomorrow. 1. Open one investment account. Just start it. 20 minutes. 2. Set up one automatic transfer. $7 a week or $30 a month. Schedule it and walk away. 3. Pick one broad, low-cost index fund and set your contribution to buy it. That's the machine. Pipe, faucet, bucket. The dial and the lock take care of themselves over the years. You will not feel the dollar leave, I promise you. But in 10 years, you're going to look at that account and feel something most people never get to feel. The quiet confidence of someone who started. Here's the truth I want you to walk away with. Wealth isn't built by the person who invests the most. It's built by the person who starts small, automatic, and boring, and then keeps quietly turning the dial while everyone else waits for the perfect moment that never comes. $1 a day won't change your life this year, but the machine you build with it just might change the next 40. If you want the trackers, the weekly missions, that's exactly what we do inside the $100,000 club. Links below. First members get in at the founding price, and it goes up as we grow. Build the machine. Feed the machine. I'll see you inside.